Hey everybody, Scott Riley, the market update desk. It's May 13th and MLS number 157524. Pretty flat throughout the day today, but we wanted to go over what came out in the CPI or Consumer Price Index inflation report and give some background on that. So what it showed is that the April headline CPI came in at plus 0.2, which was 1/10 lower than what the market expected, and it lowered the year over year consumer inflation headline from 2.4 to 2.3. Now, one of the things that helped the decline was a decrease in food prices and a slight decline in gasoline prices. Now, it'll be interesting to see if the gasoline prices stay this way, because that is a nice little benefit that we're getting within it. Now, within the core reading, which takes out the volatile food and energy, that also showed a 0.2 decline, which was in line with estimates. And it also dropped the year over year core inflation by 1/10, which is good news. Now, the interesting thing is the market kind of took this in stride, didn't give us a lot on the 10-year treasury. And really the overlying theme is the market isn't trusting what it's seeing in the data. Interesting, because in their minds, it's not showing any of the potential effects of tariffs that probably won't be seen until next month's reading, which would be the May reading. So we've got a little bit of ways to go. The market's just not necessarily trading in what the data shows. They're interpreting what could be, which is frustrating on our end. Now, one of the things we're seeing is used car prices went down for the second month in a row. They fell 0.5%, while the new car prices were flat. Still going into that premise that any potential tariffs are not there. Airline fares fell 2.8% after falling 5.3% the previous month. And that's due to kind of a combination of less demand and lower jet fuel prices. Shelter, still the pain in our butt, specifically the owner's equivalent rent. Now, the owner's equivalent rent is a survey that is done that asks homeowners, if you rented your house out, how much would you rent it for? No statistical data that backs it up, just a potential emotional response. So this is really overstated, but it falls through in this report and affects us. Because shelter as a total makes up 44% of the total index, and that came in up 0.3, and it's still lagging behind what we see in many other rental indicators and housing indicators. And that owner's equivalent rent just is a thorn on our side. It was showing up 4% year over year. It just doesn't match it what the real data is. So we also saw the short run data, the 3-month inflation run, fall down from 2.5% to 1.5%. Also, the 3-month run rate stayed steady at 3%. So we're seeing positive direction within the inflation numbers. It's just the market is not trading based on that. It wants to see one of these reports that they think tariffs will be impacted by. So we'll wait and see. The market's flat today. Stock market was still up a little bit after the roar yesterday. 10-year bonds are still trading in this pattern of elevated status. And I get the feeling we may be here for a little bit, especially as more trade deals come in. We're going to see potentially stocks increase with bond money flowing into the equity market. So we'll stay on top of everything, keep you up to date. Scott Riley, the Market Update Desk, your original singular market news source for West Michigan. 616-293-2189.